Thank you for being here this evening. Waiting for the management to walk in. Thank you. Thank you. Handing it over to Chandra for opening remarks.
Good afternoon to all of you. It's a great pleasure to meet with you all to give a commentary on our results for the year FY14 and the Q4. We have had a very good year, and let me walk you through the quarter numbers. In terms of Q4, we achieved a constant currency growth of 1.9% and a dollar growth of 1.9% and a rupee term growth of 1.2% on a sequential basis. Year on year, it translated to 31% on the revenue line. On the profit line, we had a sequential growth of 2.3% to 5,297 crores, which translates to a year-on-year growth of 51% last year Q4 to this year Q4. The net margin for the quarter is at an all-time high at 24.6%, an improvement of 25 basis points on a sequential basis and a 330 basis points on an annual basis. And we achieved a volume growth which is very credible at 2.6%. And we signed up at least 9 large deals, and the utilization is at 83.8% excluding trainees and almost 78% including trainees. The growth was predominantly led by Europe, UK, Asia Pacific, followed by the US. If you take the yearly numbers, we ended the year with revenues of 81,000 crores and 81,809 crores, which translates to a 30% growth on an annual basis. And in terms of the volume, on an annual basis, it was 17.4%. And net income for the year, we ended at 19,117 crores, which translates to 37.5% year on year. The operating margin as we exit FY14 is an all-time high at 29.1%, an improvement of 210 basis points over the previous year. And our total employees for the company crossed 300,000 mark. We ended at 300,464 employees. Gross addition for the year was 61,200 employees. The attrition remains under control and is a benchmark at 10.4% for the IT and overall attrition at 11.3% for all services globally. So it's been an exceptional year for us, and we're exiting the year with a great growth momentum and expect to do FY15, which we predict will be better than FY14. Thank you.
Thank you, sir. Now for questions. First to go would be Kritika from CNBC.
Hi, Chandra. First question, taking from what you just said, FY15 is expected to be better than FY14. You've been reiterating that. What are the areas that you are bullish on? Specifically, Europe, US, of course, you gave a demarcation that it has been better. Can you point out the pressure points that you had seen in FY14? Are they likely to clear out by FY15?
I think if you really look at FY14, we said that we will do well and we have done well. Having said that, during the year, we did say that our India business is getting soft, and we explained why. And the India business has been soft. Going into FY15, we think that India from the current levels will improve, but we've got to see. As we have said that we're going to wait for the first 2 quarters. Then overall, if you look at what clients are telling us, we look at our deal pipeline, deal closures, order book, and the sentiment, and the discretionary spend, taking into all of this, we believe that FY15 will be a stronger year than FY14. And markets, definitely US, Europe, followed by Asia Pacific will be important markets. In terms of industries, financial services, retail, life sciences will be very important verticals going forward.
Chandra, you said the last time we were talking, you said that there are some clients that are still in the decision-making stage and haven't finalized their budget as yet. What is the sense that you're getting? What is the kind of pickup that you can see? Say if you can break it up in US and Europe, what is the kind of IT budget pickup that you are seeing from clients?
I think overall we get a positive feedback from clients. There are 3 areas of spend. Definitely in the areas regard to simplification, they are driving efficiency. And there is a discretionary budget that is going towards digital that we are hearing across the board, and we are engaged with our clients in that area. And the third area of spend is regulatory changes, governance, security, controls, risk management, a variety of those under the governance umbrella. So all these 3 areas are the areas in which the customers are spending, and that's the message we get in our client segment.
Typically, Chandra, Q3, Q4 are seasonally weaker quarters compared to Q1 and Q2. What were specifically the seasonal pressure points for Q4?
You see, if you go back every year, Q4 has a huge uptick in India. If you take last year Q4, India will usually give a boost because it's a budgetary year end.
Right.
And that didn't happen, and we didn't expect it to happen as far as India is concerned. And I think that's the primary difference between what is the uptick you get in Q4. Slightly better than Q3 if you expect it to happen, and that should happen. And we didn't expect it to happen this year, and it did not happen.
Okay, so Chandra, then since you're talking about the India business, domestic is a pressure point. By when will the pressure coming in from domestic gradually ease out? Is there a timeline that you can give? Because sectors like high-tech and telecom have easily cleared out over the last couple of quarters.
The first thing is that we were declining in India, and we said that India business is soft. The good thing is that it is more or less flattish this quarter around. From Q3 to Q4, it is flattish. It's not declined. And going forward, we need to wait and see. And we said that we are going to be opportunistic and wait and watch more. And all I would estimate is that it's not going to decline further, not unlikely to decline further.
Okay.
But when the growth will pick up, how much growth, I think we'll wait it out.
Okay, Rajesh, a quick question from you on margins. About roughly 60 basis points. Can you break this up? What is the impact of constant currency? And if you can give us an idea about Forex performance as well?
In this quarter, there's practically no impact of currency. So all of that 60 bips is essentially business impact.
Okay.
And it has come from essentially on the gross margin side, and on SG&A we have a slight improvement. But nothing much to call out within that. It's a 60 bips on the this thing. From a revenue perspective, currency resulted in about 70 bips of degrowth on currency. Okay. But because of the volatility in multiple currencies, at the margin level, that cancelled out, and we don't have any impact at the margin.
Okay, Ajoy, this time around, I think all employees would want to know about the wage hike. So, onshore, offshore, can you give us a breakup for FY15? What is the wage hike quantum? And for FY15, you've already revealed the exact number of lateral employees. Can you tell me how many? You revealed freshers. Can you give us a breakup of lateral and freshers and the overall FY15 hiring?
All that you want to know, I'll tell you in the next minute or so. There's been a phenomenal year from our point of view and from our employees' point of view. I think everybody will be happy with the kind of increments that we have, that we are going to give. As far as India is concerned, on an average is going to be 10%. And I'm sure everyone in our organization would be very happy with the kind of increments that we are looking at. That high performers will of course get much higher than that. Of course, 14 plus is the number that we are looking at for high performers. When it comes to our developed market, it is 2 to 4, and developing countries is about 4 to 6 is the kind of numbers that we have. This is the increment story. And the other fact that comes in is the variable payout as far as Q4 is concerned. That is 100% for at the organization level. and then individual units will be based on the individual unit performance. So that is the way the variable payout is there. Now your next question, I think you have asked all the questions.
FY15
is related to
lateral and pressure
FY15,
breakup.
the entry level, what we are going to do as far as gross addition is concerned. We are planning 55,000 at this point in time, and I've already total. And I've already said that we have, as far as our campus hire is concerned, it's 25,000. That's already closed. All the offer letters have gone, and people will start joining from 1st of June onwards throughout the year based on our requirements. And the rest will be laterals plus overseas plus everything else. So we'll have to wait and see how that breakup happens. I'm not in a position to give you exact breakup of 55. Total 55, 25 campus, done.
Okay, last question. Since Ajay just answered on the wage hikes, and it's a substantial wage hike compared to your peers, Rajesh, what are the levers that you're putting in place to mitigate the kind of risk that wage hikes will have on margins? Because typically next quarter is when the wage hikes impact margins and are absorbed.
If you go back over the last many years, we have been pretty much like clockwork giving wage hikes in April itself. So Q1 is the quarter in which wage hikes will come and impact margins. And then during the course of the year, we pretty much make this up through operational efficiencies. So the pattern will be similar. Next quarter also, there would be a margin impact due to wages. And then we'll work on it through the course of the year.
Ritu from ET Now.
Chandra, my first question to you. You said the next fiscal will be a better year, and at the same time you maintain that the domestic market will remain weak. Given that you have a larger exposure to that market compared to some of your peers, could you tell us what really you'll do to maintain profitability there? I mean, will you choose to opt out of some of those deals consciously?
I think what we do in terms of deal qualification is just a discipline that we follow across the board. It is not dependent on whether we do business in India or elsewhere. So we will continue to execute with a lot of discipline and rigor. I think we, both in terms of how we bid and also how we execute. So that's not a factor that will affect a particular market.
All right. Rajesh, in terms of margins, 60 basis points is slightly more than what we had expected, the dip. We expected about 40 basis points. Given that currency is appreciating the way it is, do you see that as a big risk? And do you think going forward in the coming year, without the cushion of a rupee depreciation, you'll be able to maintain this margin band?
Our target margin band is 26 to 28, which we have maintained over the last many years. And as we had pointed out, it is subject to impact of currency either up or down. So the band of 26 to 28, we are still comfortable that we should be able to manage it. Quarter on quarter, you will see fluctuations coming in by the currency and to some extent our own investments or our operational efficiency levers. So at this stage, currency is not a worry.
You know, how's the pricing environment right now, given that some of your peers are going more aggressive on that front? Do you see any threat there? And what are the pressure points that you anticipate in the coming year?
Pricing as per se as an environment, I don't think we've seen any significant change during the course of the quarter. And otherwise, the environment, there's nothing to call out on, Chandra, unless you want to add something.
Chandra, one last question. You know, TCS is, so to say, been the star performer these past few years, especially given that some of your peers have been weak, but they're showing signs of a pickup. They're strengthening there, and the worry is that your base has grown so large. Do you think you'll be able to sustain this momentum and market lead going forward for the next few years?
So let's talk about TCS.
Yeah.
You delivered a great FY14, and I have told you that FY15 will be better than FY14. Let's leave it at that.
All right. Thank you.
Priya from Bloomberg.
You know, one of your peer said that discretionary spending is a concern. In fact, there has been a slowdown as far as decision making on discretionary spends. Are you also seeing that kind of concern?
See, I think, as I said, I'll talk about our data points, the deal wins we have had, client discussions we have had, and what we see in our pipeline. And we believe that we have a very good growth momentum. We see discretionary spend going towards digital. We are engaged with a large number of clients on digital, and I do think it's a big opportunity. And I only can reiterate whatever I have said in January, and we believe that the momentum is pretty strong.
Talking about the H-1B visas, what kind of impact do you see in the next quarter as far as the fees for these visas are concerned?
Fees for the visas remain the same. So the number of visas that we have applied are what we need for our business point of view. And as you know that as far as the total quota was concerned, that was hit on 7th of April. So from that point onwards, no more applications are being taken in. So we have applied our H-1B visas, and based on the lottery, we will know how many we will get. And once that lottery process is over, that's the time when I can tell you what's the number that we are getting. Right.
Since she mentioned that your peers have spoken about weakness in those segments, can you specify retail and high tech is what they said, where they say weakness. What about TCS? I mean, how is
See,
how are
as I have
those
said
segments?
that as you go into FY15, we expect BFS will continue to lead. BFS will continue to be strong. We expect retail to be strong, life sciences to be strong. Even high tech, we expect to do well. So these sectors will definitely do well, and as well as smaller sectors in our portfolio, like media, like utilities. These sectors will definitely do well.
And in your investor conference just last month, you mentioned that the smaller verticals will drive growth instead of the bread and butter BFSI segments. Will that continue to be the case?
I have said that. The growth,
I mean,
you can ask it any single way, every single
what
way.
I mean is BFS.
See, the size of BFS is so large. And when BFS does well, it definitely gives a good push. So BFS will do well. The growth will be led by larger verticals, BFS and retail. Smaller verticals will definitely do well, but they are at a smaller base.
Amol from Z.
Yeah. Hi, sir. Just one question, since the other questions are already answered. Sir, NASSCOM also is very bullish on SMAC, and you also spoke about digital, a couple of times. I just want to know, since you said that FY15 will be much better, which are the areas, which are the sectors you will think contribute more?
Something. I just now said. BFS, retail, life sciences, these sectors will definitely lead, followed by a number of sectors which are like utilities, media, energy. All the sectors will do well, but they are at a smaller base. But all the sectors will do well. And digital will be a very, very important area of growth.
Kritika will come back to you.
So I have said that we'll make $3 to $5 billion in digital for the next few years.
Okay. Aditi from Business Standard.
Hello,
I'm
sir.
not changing commentary. You're only asking the question in multiple different ways.
Hello, sir. My question to you is, what has been the benefit of digital spending? Can you update us on that? And your outlook for FY15 on this?
So, as I said, digital is a very important area of growth, but we don't call out the digital revenue separately, so I don't want to give you a number now. But it will be an important area, important growth driver.
Okay. Next question is to Mr. Rajesh. Sir, is your hedging policy likely to change going ahead? Since rupee
What we have
strengthening.
said is that we had called out a slight change in our accounting policy on hedging, which is actually it's a more involved one. We have put out a note on the website. If you would be interested, you can look at that. But otherwise, at a policy level, no. We continue to hedge receivables completely. And on revenue, we hedge on the short to medium term, and no immediate change to the policy.
Thank you.
Aradhana from Reuters.
When you say FY15 will be better than FY14, in what terms? Is this revenue growth, deal pipeline?
Obviously in revenue growth.
Okay. And also I want to check, which of your emerging markets do you think are going to grow faster than some of your, are going to outperform next year?
I think as I said, the pipeline is quite good, and I'm not going to single out. I've said the only thing I've singled out is that I'm still soft on India.
Okay.
That's the only thing I've singled out, and I would like to leave it at that. I'm not going to say whether Middle East is going to be better than Asia Pacific is going to be better than Latin America.
Okay.
I'm not going to say that because they're all having a good pipeline, good momentum. But I do expect India to trail for the time being.
Okay. And also I want to check, because FY15 is going to be better than FY14 and you've already beat NASSCOM growth estimates, would it be fair to say that in FY15 as well you will?
Of course, yes.
Okay.
You can assume that.
All right. Thank you.
Joshelle from ET.
Hello, sir. Just one question. You've already mentioned that it's about 55,000 that you're going to hire and you're going to beat NASSCOM estimates. That 55,000 number was also similar to last year. So is utilization going to be the lever you're going to hit the, the non-linear growth faster than, say, some of your peers?
See, last year we started with 50,000 people as the target. We ended up hiring 61,200 people. So we will calibrate the recruitment as we go along, but utilization will be a lever, will continue to be a lever. If you see the utilization, including trainees, it has gone up almost 500 basis points from last year Q4 to this year Q4. So that will continue to be a lever, and we think on our scale we can operate at a higher utilization. So we will definitely use that.
Shiv Priya from ET.
Hi. Just wanted to check what was really, you said Europe, UK and APAC, followed by US. So
Europe, APAC and UK.
Yeah, Europe, APAC and UK, is that okay? So what's really been the driver in markets like Europe and UK? And APAC as well?
I think it's a fairly well spread out across services. If you really look at the Q4 performance, from an industry point of view, BFS has led it, has done very well. And then if you look at life sciences has done well, high tech has done well. Manufacturing has been soft, primarily due to India. India affected the growth in manufacturing. And from a market perspective, UK and APAC and US, I said in that order, but it has been pretty spread out in terms of all the services. But you don't want to get into too many details, primarily because it's anyway a quarter where it's a smaller growth compared to some of the other quarters. So,
for instance, sometime back there was a lot of uptick in government projects in UK. So I was wondering if there are any specific drivers in Europe and UK which
has been pretty spread out. It's pretty even. If you see the services portfolio, all the services are pretty much around the company growth rate for Q4. Whether you take enterprise solutions, whether you take a GCP, whether you take assurance, whether you take infrastructure, all of them pretty much form a cluster.
And why was US softer than the rest? Is it just a cyclical thing?
It's just a cyclical thing, yeah.
Adit from HBL.
Hi, a couple of questions. Firstly to Rajesh, you mentioned that there's some change in your accounting policy for forex hedging. If you can just specify that.
We have done an early adoption of the new standard called IFRS 9, which has certain variations in terms of the way we recognize the cost of hedge instruments. We believe that this standard more closely aligns this to the economic benefits of the instrument. More importantly, it reduces the intra-quarter volatility that is introduced by the mark-to-market operation. So that was notified in November, and it becomes mandatory only after 2 years. But we felt that it would be in keeping that we adopt it early because we believe that that's the way to go.
All right. Also, a question to Chandra. I mean, the press release talks about a lot of wins in the digital space, and you also seem to be pretty bullish. Now, more than 10 wins I can see. By when do you think these will all start translating into revenues?
From Q1.
Q1 onwards? Okay. Thanks.
Beryl from DNA.
Hi, Chandra, I just had one clarification. When you mentioned the 3 areas of client spend, could you just repeat that? 3 main
Simplification. I just broadly classify them as simplification, digital, and third is governance.
Okay, thanks.
Ayushman from Cogency.
Hi, Ayushman here. So, what's the scene in the domestic market here, and what will be the impact of elections as far as the closure of deals are concerned, and what was the percentage of revenues contributed by the India business?
So I already answered that. I think India is flat, pretty much flat this quarter on a sequential basis, and we had shared that last quarter itself. In fact, even before the last quarter, we had said that India is going to be soft for quite some time. because we see delays in deal closures. And until the elections are over, we expect the India softness to continue. That's what we have factored in.
In terms of the deal sizes and durations, I mean, how do you see that? I mean,
I cannot quantify more. I've just said that we have factored softness in India, so it doesn't matter. So we expect it to be flattish. We expected it to go down last quarter, it did, and then marginal dip to a flattish quarter expected. We ended up with a flattish quarter, and we are not factoring in big growth in India at this point.
No, I mean, globally also, in terms of the duration of deals, I mean, have they gone beyond long-term deals?
No, they are normal.
Beyond
it's business as usual.
5 years, or is it like?
No, that depends on the deal. There are deals which happen for 1 year duration, deals for 3 years, deals for 5 years.
Okay.
And there may be some unique deals which may be beyond 5 years.
Okay.
Yeah, but depends on the business case that the client comes up with.
Thanks.
We don't talk about any clients in specific.
But when you say domestic market is weak and elections hold the key, there will be a turnaround after that. What about the spending from the other parties, the private sector in India? How is that?
See, overall India is soft. Overall India is soft. Okay? And we have factored in softness for a few quarters. Overall India is soft.
We'll do this later. Anu from Bloomberg has a question.
So you said that you're upbeat, so you're more for the next year. Now you're more upbeat about the pricing or the deal pipelines. Which one is going to?
So pricing is more or less stable. I think Rajesh already answered it. We don't see any particular change to the pricing trend at this point in time. It will continue to be flattish. I think if you see our pricing for the last several quarters, it just goes up a little, goes down a little, primarily because of the realization. Generally, there is not much of an impact due to pricing. And we expect that trend to continue for the time being. So largely the growth should be taken as volume driven. But I do expect that we should be able to get some uptake as we scale the digital.
Okay, final question from Adit from HPL.
Yeah, just a different question. In the last couple of weeks, we've been hearing a lot about this Heartbleed vulnerability in OpenSSL. Now it's been something that has evaded the public eye in the last 2 years, and a lot of commentary around it suggests that there will be more software related testing going forward to ensure that this kind of vulnerability does not surface again. So is that an opportunity for companies like yourselves?
I think security is a very important area. It's an important area of opportunity, and there is a lot that needs to be done overall. When you address security in a holistic fashion, it will also drive and pull through some of the cloud infrastructure based engagements a lot more than what it is today. So I think net it's an opportunity. We have a specialized group focusing on that.
On security per se.
Thank you very much. Okay.
Can you see the details? It's already there. It's published. Okay.
We'll take it offline.
We'll take it offline. Yeah. Okay.
Do join us for a cup of tea, and television channels bring up your boom forward. Thank you.